Good morning, hello and welcome to Moneycontrol's live stream. You're tuned into fresh new edition of Opening Bell with me, Lovisha Darad. Well, it's the final day of the trading session, and after yesterday's spectacular rally, the GIFT Nifty was pointing out to an extension of that uptrend. However, if you look at the pre-open rates, that indicate otherwise a bit of a muted sentiment. So we'll watch out how we open at this point of time. But yes, since yesterday we crossed that 25,000 psychological barrier, 25,200 and 25,500 is something that we need to watch out for in today's trading session as well. But coming to the global screen, quite a mixed trend. S&P, if you look at the US markets, S&P 500 has advanced to the fourth straight day, while Nasdaq has slipped and Dow Jones on the other hand has gained in the trading session. On the other hand, if you look at the Asian markets, they were largely lower. Japan slipped after its first quarter GDP data. It came in lower with what the street was estimating. So it's largely a very muted global cues that we are starting off with, and the pre-open rates also indicate and reflect the same sentiment at this point of time. So all in all, the global markets and the Indian markets right now not vocally in the green yet. But yes, we need to watch out if stock specific action would come into our own as earnings, as a stock specific action, like the stocks will be reacting to their March quarter results as well. Also, keep dropping your stock related queries and we'll take them up shortly before 9:30 a.m. as well. And now before we delve deeper into the show, let's quickly take a look at the top headlines this hour. Stocks closed mostly higher in the US markets despite the slump in tech shares as investors pass retail sales data. Dow adds 70 points higher while S&P 500 advances for the fourth day on favorable economic data and corporate earnings. Asian markets are mostly lower in early trade as investors assess trade developments. The GIFT Nifty is indicating a good start, but the pre-open rates point out to a muted start for our own markets. Oil prices fall on expectations of US-Iran nuclear deal that would result in easing in sanctions and more barrels released into the global market. Coal prices edge up as US Treasury yields slip as US economic data spurs rate cut hopes. More accounting discrepancies come to the fore at IndusInd Bank. Internal audit finds 674 crore rupees incorrectly recorded as interest income and 595 crore rupees in substantiated other assets. A big block deal is rightly in Bharti Airtel today. Reports suggested that Singtel will share 5 crore shares for 8,500 crore rupees. Alright, coming to how yesterday we panned out, we did see that the Nifty had hit about 7-month high in intraday deals, and like I was mentioning earlier as well, Nifty did cross that 25,000 psychological resistance levels, the last that was seen in October 17 last year. We saw that the broad-based buying lifted the markets yesterday, and 49 out of 50 stocks did advance in the last session as well. We saw that the Nifty ended with about 395 points gain above that 2550 mark as well, and like I was mentioning, that the broader end of the markets they exhibited strength for the fourth straight day as well. Amid the cross-border tensions, despite the ceasefire, defense stocks continue to trade higher for the fifth straight day, and we'll watch out if the momentum sustains in today's trading session as well. Some of the Q4 results that we need to watch out for today, that includes the likes of BHEL, Hyundai Motor, Delhivery. All of these will be reporting to their Q4 numbers as well. Now coming to the cues that might set the tone of today's trading session. Yesterday we see that the FIs have once again turned as the net buyers of Indian equity markets. In yesterday's trading session, they bought stocks which was worth about 5393 crore rupees in the cash markets. On the other hand, DIIs have sold stocks yesterday which was worth about 1668 crore rupees in the cash markets. On the other hand, if you look at the option cues data, that is reflecting a little bit of optimism. The put call ratio has risen to about 1.19 levels. And coming to the F&O ban list, the stock that have been retained, that includes the likes of CDSL, Hindustan Copper and Manappuram Finance. All of them are included in the F&O ban list as of yet. So yes, a lot of levels that we need to watch out for. But before we, let's before we move on deeper into the show, let's quickly get on board with our technical expert of the show. Joining me, Sudeep Shah of SBI Securities. Sudeep, good morning. Yesterday we did cross that 25,000 mark for Nifty 50. But right now, the street is hoping for 25,500 as an extension. Do you expect that is can we reach there soon?
Good morning, Lovisha. See, yes, I do expect 25,500 and maybe even higher levels also, because the way the breakout has come, it's a strong breakout now. On the weekly chart also, if you see, it's a strong, it's heading towards a strong close, as well as it surpassed all the important resistances that were there from December 2024. So, and one more thing, if you look at it, is that a lot of broad-based participation was witnessed yesterday across mid caps, small caps, large caps. A lot of stocks moved. So what we feel is that it's a strong rally, and cash buying of more than 5,000 crores by FIIs yesterday. That is one of the highest numbers in the recent memory. So what we feel is that with FII buying coming back, crude prices now settling to 63, $64, dollar index also now stabilizing to, around 101. Plus you plus our own rupee is now closer to 84 half. So now all these macro factors are giving a lot of comfort. So we feel that yes, steadily we might not see a immediate move towards this 25,500, 26,000 zone, but yes, steadily the texture is hinting towards the market moving to that terrain. And on the downside, overall now 24,700, 24,800 zone will act as a strong support. And we feel that any dips towards these levels should be used to go long and create positions in stocks which are outperforming the indices and their own sectoral indices, as well as the broad-based indices.
Okay, all right. Sudeep, yesterday we did see, Bank Nifty also performing well, but 56,000 is what the street is hoping for, that, for a further upside for the bulls to retain ahead as well. 56,000 is the barrier that the Bank Nifty needs to cross for. What are you watching out for Bank Nifty levels?
See, Bank Nifty, Lavisha, if you see the last almost 15 to 16 sessions, the indices are in a range between this 55,600 and 54,300 marks. So almost 2.5 to 3% range. And this consolidation has come after a rally from 50,000 to 55,500 in a matter of 5 days between 15th April and 23rd April. So in a matter of 5 sessions, the indices had moved 5,000 points, and now they're consolidating between this 1,000 1,200 point range, and that also at the higher end of the indices levels. So what we feel is that a breakout is around the corner. It's just some consolidation that is being witnessed in the indices, and from here on, positionally we feel 53,600, 54,600 will act as a strong support until this zone of 54,600 holds. Overall targets for Bank Nifty on the upside would be closer to 56,200 and 56,700. So a breakout is around the corner. It's just a matter of a couple of days within which we see this consolidation breaking out.
Okay. Okay. All right. Sudeep, I want to understand about defense stocks also, because yesterday the buying extended for the fifth straight day. Do you believe that this rally has more momentum going ahead?
Absolutely. There are no two doubts about defense stocks carrying forward their momentum into the next couple of weeks also. But yes, one needs to be a bit wary and skeptical about one thing, that these stocks have run up too fast in the last several sessions. So we might not see the same kind of quantum of gains in the coming few days, like 10% moves or 10-15% moves in the stocks. A lot of stocks say in a matter of days. We might now see some consolidation, but yes, good quality stocks like HAL, BEL, or GRSC or Mazgaon Dog, thereabouts, these stocks will, in a say, if you look at it from a 3 to 6 months perspective, these stocks would be much higher than they are at current, than what levels they are at currently.
Okay, okay. I want to also understand about drone stocks, because even there we can see a lot of strength. Idea Forge Technologies, then Zentech, Dronacharya, all of these counters have been buzzing nearly about 18 to 30% in just past couple of sessions. How do you see these on the charts at this point of time?
Lavisha, see, out of all these stocks, idea for Zentek, I feel Zentek is a much better stock. If you look at the charts from a positional perspective, the stock had almost halved from 2600 to it went to 1000 rupees, but once again it has seen a rebound. So I guess out of all these stocks, Zentek would be a preferred pick, looking at the fundamentals also as well as the technicals.
Okay, okay, all right. So more strength for defense and drone stocks is expected today, but the first rates coming on your screen, we have opened flat in the red at this point of time. Very quiet start for the markets. Below that 2550 levels, but still holding above that 25,000 levels for the Nifty 50. Coming to Sensex is also down about 196 points. Both of the headline indices have opened in the negative territory. If you look at some of the sectoral gainers and losers, it will be adjusting to the rates in a bit. But if you look at India VIX at this point of time, it has seen a little bit of a mild uptick at this point, 0.3% for India VIX. If you look at some of the sectoral losers, Nifty IT index in the early trade is not doing well, 0.4% cut coming in for the Nifty IT index. Other than that, we can see Nifty Auto index also losing in the trade, flat in the red for auto index as well. Bank Nifty also, like we were talking about earlier, that it is key for further ups, further strength in the markets. That is opened in the green with about 0.1% cut as well. Other than that, Nifty Pharma index flat in the red. Nifty Realty Index unchanged at this point of time. Let's look at FMCG and Metal Index. Metal Index has opened flat in the red. That also is losing momentum at this point of time. If you look at the broader end of the markets, however, it's exhibiting some strength compared to what the headline indices are showcasing. Small caps seeking about very slim gains, flat in the green at this point, and mid caps also flat in the green. So, like mid caps and small caps have been advancing for the fourth day, and today also it's going to be fifth day that the broader end of the markets have been advancing. Let's look at some of the top gainers and losers on the Nifty 50. Coal India, Maruti Suzuki, Bajaj Finserv doing well on the upside with gaining about 0.4% or so. Very mild gains coming in at this point. NTPC, Cipla also some of the gainers on the Nifty 50 list. On the other hand, if we look at some of the top losers on the Nifty 50, Bharti Airtel, given the block deal that Singtel was about to divest some of its stake in the company, seeing a cut of about 2.5% or so. As a result of the block deal that is on the way. IndusInd Bank also about 1.7% cut, seeing we did see reports that two new accounting discrepancies have been reported on the lender, and both of the brokerages, CLSA and Morgan Stanley, have also downgraded the counter as well. So the stock is seeing the sentimental reaction play out at this point. 1.57%, nearly 2% cut coming in on IndusInd Bank. Other than that, we can see SBI not doing well with about 1.3% cut. Infosys also with about a percent cut or so, and M&M and Dr. Reddy's also as one of the top losers on the Nifty 50. But yes, like I was talking about IndusInd Bank, the stock of the hour at this point, seeing a cut of about nearly 2%. We saw that there were two new accounting issues have been discovered in its internal audit. First is your 674 crore rupees, which was incorrectly recorded as interest for the past 3 quarters in FY25 itself. And the second is your 595 crore rupees, which was accounted as unsubstantiated balances in their other assets. So yes, it is quite negative given that we have seen the management exits in the past 2 weeks as well, and other than that we also saw the derivatives discrepancy that came in for the lender. Today, both the global brokerage firms, your CLSA and Morgan Stanley, have downgraded the counter. CLSA has downgraded the stock to a hold from buy, and have also cut the target price to about 780 rupees per share. And they believe that the adjusting the 674 crore rupees interest income implies that the margins are expected to be lower, 70 basis point lower than what they had reported earlier. And they've also cut the FY25 PAT estimates by about 22% due to the reversal, and they've also cut the FY26 and 27 estimates by about 13 to 17% as well. Morgan Stanley also believes that the FY26 and 27 earnings estimates is a risk to about 15 to 20% downgrade. Sudeep, how does the counter look like? Because past couple of sessions we were seeing that the IndusInd Bank has some negative play out and negative sentiment playing out despite the upbeat headline indices. How much of a downside do you expect going ahead for IndusInd Bank?
Uh, See, Lovisha, what the problem with IndusInd Bank is that the structure of the stock positionally since May, June 2024 has been disturbing. We've seen a breakdown followed by periods of consolidation and once again the stock breaking down. So this is the characteristics of the stock. And if you look at the current structure also, we feel until and unless this zone of 840, 850 is not crossed, might be 10% from the current levels, but yes, may not be immediately a sell candidate, but overall till the time that these resistance levels are not getting crossed, it is difficult for the stock to move up convincingly, and we feel gradually it is headed lower. Maybe levels of 700, 650 also could be on the card. So my sense is that our viewers should refrain from adding this stock. There are a lot many better stocks available, HDFC Bank, ICICI Bank. Yeah, if frontline banks are to be preferred, then those are the two names which would give you safety of capital also, and incremental price action also could be visible there.
Okay, okay. Let's take some viewer query. The first query coming in from Satya. He's asking the views on IDBI Bank, since we are talking about the banking pack as well. Sudeep, what is your view on the counter? Past 1 month, the stock is seeing decent run up, 6% uptick or so. And we saw mixed Q4 results which came in for the public lender as well.
Yeah, see, the if you look at the charts, it's a decent rounding bottom formation which has been visible in this chart on the weekly chart. Also, since October, the stock was consolidating and was not able to cross this 84, 83, 84 mark. And today, yesterday as well as today, we are seeing a strong breakout with volumes. So till the time this zone of 80, 81 holds now, this breakout could continue up to 93, 98 levels, and we feel that this should be held in the portfolio at least from a trading perspective. So yes, this could be added at the current levels, and on dips, keep a stop of 81.
Okay, all right. Let's also talk about Bharti Airtel, because the counter is seeing about 1.3% equity which has changed hands. We did have reports which claim that Singtel is expected to sell some stake in the counter, and we are seeing that the counter is also reacting quite negatively, 2% downtick that is coming on the counter. But Bharti Airtel for the long term, for the near term, Sudeep, how does the counter look like? Because it did post a good set of Q4 numbers.
Uh, Alisha, let's dissect this in two parts. Firstly, if you look at the long-term trajectory of the stock is headed upwards. Minor consolidation is being witnessed right now. And extreme short-term, the stock is facing pressure closer to 1850, 1860 levels. So from a short-term perspective, if one has to go long, then the long positions can be built above 1850 levels with a stop of 1820, and then the stock could head towards 1920, 1950 levels. So in last 5 7 sessions, if you see 1850, 1855 levels, 1860 levels are those levels from where the pressure is visible in the stock. So let that level cross, and then you could see a strong upside in this counter. And I feel right now it is the time for a lot of mid caps to outperform. So you might see some consolidation in these large cap names, and that could be just a matter of time, and it's just a passing phase for these large caps. And eventually, with the structural trend on the upside, Bharti Airtel would take support closer to 1720, 1750 levels, and then start rebounding from that.
Okay, okay, all right. That's the stock that we need to watch out on. Let's take another viewer query at this point of time. That is, your Cine is asking the views on Indian Oil. Indian Oil on the counter, what is your view, Sudeep? Because from February lows, the stock has seen a good run up, about 27% uptick. That is what we watched out for.
Yeah, sorry. Lavisha, one thing, this is a very good stock and a classic stock to buy and hold, because there are a lot of factors which are coming in favor for this stock. Crude price is now sustaining to 63, $64 a barrel. The chart on the weekly time frame is steadily improving from 120 to 140. We are witnessing some kind of higher low formation here. And also, what's important is that the stock is now at the cusp of breaking out of its 200-day moving average now. And we feel from the current levels, this could be added, or if someone is holding it, can continue to hold, keep a stop of 139. The stock could head towards 158 to 163 levels.
Okay, all right. Let's take another viewer query. Pradeep is asking the views on CCL products. How does the counter look like on the charts, Sudeep? Because after the March quarter performance, the stock is seeing a good breakout.
Lovisha, it's a strong chart on the weekly time frame. A brilliant pullback from 600 levels that we have witnessed in the last 2 weeks. And despite that pullback, the indices, the stock is still in a range between 550 and 800 over the period of, say, last 2 years, right? From June, July 2023, the stock is just trading in this range. So while this structure is very strong, we feel that's the overall from a longer time frame period, the consolidation breakout is around the corner, and the stock could head towards 900, 950 levels also in the coming couple of quarters. So it's a medium to long term pick, and this stock could be held in the portfolio.
Okay, all right. Stock to be hold on to the portfolio. Let's take another viewer query. Debu K is asking the views on Power India for an investment. Power Grid, how does the counter look like, Sudeep? Because from March lows, the stock is seeing good catch up at this point. Is seeing like nearly 16 to 17% uptick.
Lavisha, I feel Power Grid right now, it's facing some kind of resistance around 305, 310 levels. So until and unless these levels are not crossed, just wait for a while, because a lot of PSU stocks in the last few sessions they have moved. But the stocks which are not moving, they are showing some kind of a relative weakness across. So what we feel is that one needs to wait for a while and let this 305 level get crossed, and above 305 the stock could head towards 320, 325 levels, which were the prior highs. So just wait and watch for a while. 305 is the level that one needs to just watch out for, and then start building up positions slowly.
Okay, all right. Let's take another viewer query at this point. That is your Alex Kalachil is asking the views on JSW Steel for a fresh entry. Sorry, this is your JSW Steel for a fresh entry at this point of time. How does the counter look like on the charts, Sudeep, for JSW Steel?
Lavisha, overall the stock is in an uptrend. The weekly charts show a bounce back on the weekly charts right from sorry 970, 975 levels to this current levels. That shows the kind of strength that the stock is witnessing. And also, if you see in the last 4 or 5 sessions, the pullbacks in this stock have been quite strong. So looking at the overall structure of JSW Steel as well as the metal index and other top stocks in the metal counters, we feel that overall the entire space is set to move from the current levels, and we feel from the current levels JSW Steel could be headed towards 1070, 1080, which were the prior highs, and sustaining above that could have a bigger breakout also on cards. And on the downside, the support zone now would be 995.
Okay, all right. Let's take another viewer query. Anunay is asking the views on Bank of Maharashtra. He's bought it at 47 odd levels, and right now he's asking whether he should hold or book some profits. So 47 odd levels, the stock is up about, it's 50 at this point of time, and this in past 1 month also the stock is like nearly 7% gains. So what is your view on the counter, Sudeep?
See, if you look at the stock in the last 15 days, right from 22nd April, 15, 16 sessions, the stock has been consolidating between 49 and 52 levels. So not a big move here compared to the other PSU banks where we've seen decent moves, say it's Canara Bank, Union Bank, Bank of India. So from that perspective, the stock has not performed well. But yes, the numbers in the last several quarters have been really upbeat. The numbers have been good. So no complaints on from the fundamental standpoint. But yes, from the technical standpoint, I feel a breakout above 52 levels is quite necessary here. And above 52 levels, which is even the 200-day moving average, the stock could head towards 57, 58 levels, and that could be very fast. So while we are seeing some kind of a base building here, if someone wishes to add the stock at current levels, can add and add on dips also. Keep a stop loss of 48 levels, which is the base of the consolidation pattern, and till 48 is held, we feel gradually the stock is headed towards 58 levels.
Okay, all right. Let's move on to another viewer query at this point of time. That is your Satya is asking the short-term view on Indigo as a counter. Indigo, if we see due to the cross-border tensions, it did see that the sentimental negative playout was visible on the counter. But from the past 2-3 sessions, the stock has recovered, Sudeep, about 9% or so.
This cross-border terrorism and the entire issue which was there during the last weekend with a lot of airports being shut and a lot of flights being diverted and cancelled. So that had some kind of an impact. But Indigo is such a large company with a lot of bigger profit pool and a lot of forward-looking business. So what we feel is that thing got digested. And even a lot of issues right now with travel to Turkey being banned or thinking about getting banned, or a lot of still we feel that despite that also Indigo would recover. And while you're and the charts are the best example of what is going to come forward. So what we feel is that this entire thing is now kind of discounted, and overall we feel 5400 levels will act as a strong support, and the stock is headed towards 6000 levels or higher levels than that.
Okay, all right. Let's move on to another viewer query. That is your Anune Eriki is asking the views on Titagarh. He's bought it at 1750 and he's asking where he should exit and reduce his losses. What is your suggestion for the counter, Sudeep, for Titagarh?
See, the stock, Lovisha, the stock has given a breakout above this 815, 818 levels. 825 levels were the previous resistance, and the stock has broken out above that. So we feel that the stock is headed towards 880 to 900 levels. Although this is a bottom reversal counter, but yes, what we feel is that this could continue moving till 880, 890 levels, and the support on the downside would be closer to 820.
Okay, 820, that is the stop loss that we can watch out for. But another viewer query, Vikas is asking the views on Indocount Industries. The stock, if you look at from a 3 months perspective, very muted set. 1 month, however, the stock is done well with about 12% uptick or so. Sudeep, any counters, any resistance or target level that we need to watch out for Indocount Industries?
Krisha, I feel we can avoid Indocount Industries because a lot of other stocks are performing well, and here the stock has opened with the downside gap, and although some kind of the gap filling activity is visible, but the resistance is still quite evident closer to 350, 352 levels, where this right from the month of January, a lot of weekly closings also were attempted above this level, but selling pressure was witnessed. So I feel that yes, 350 once it crosses, then there could be a decent up move. But till this zone is not crossed, avoid going long here.
Okay, all right, avoid for this time for Indocount. Let's take another viewer query. That is your Pankaj is asking the view on Emphasis. Emphasis, how does the counter look like? Because past 1 month, the trend is quite positive, and Q4 results were also quite optimistic with their strong deal wins.
Ravish, if you look at Emphasis, the stock is now trying to recover back, and a lot of say consolidation which was happening between 2200 and 2500. Now we are witnessing a consolidation breakout on cards. So from the current level, it might be a slow mover, but yes, 2580 will act as an important support, and we could see a rebound back till 2700, 2750 levels.
Okay, all right. Let's take another viewer query. Shubham is asking the views on Tata Motors. What is your view on the counter Tata Motors, Sudeep? Because past 1 month we saw good strength. However, the Q4 results were quite negative. What is your view on the counter?
Sure, the stock is now making some kind of a move after creating a consolidation bottom in place closer to the 680, 690 levels. And I feel that overall the stock is now headed towards 770, 790 levels. And a lot of issues with respect to US-China trade deal or some kind of a demand issue. Now they are just getting settled. So from here on, I feel that this stock could be the stock to watch out for in the remainder of 2025 and can be added on dips.
Okay, all right. Just one last question before we let you go, Sudeep. What are your top picks at this hour? Anything that you're finding as good buys in this market?
Uh, See, from the defense space, we've seen a lot of stocks move. So now I'll not recommend anything from that space. But yes, from the financial space, there's one stock which we feel that could do well, and that is MCX. We are witnessing a breakout on cards here. 6,300, 6,350 is that level where a lot of times the stock was facing resistance, and today a strong move is coming around this level. So from the current levels, we feel that MCX could be bought with 6250 as a stop loss and 6550 as a target.
Okay, all right, all right. With that, we have to let you go, Sudeep. But thank you so much for your time, and we hope that we connect with you soon as well.
Absolutely. My pleasure. Thank you, Lovisha.
All right, let's take a quick check of the markets before we move on to the next guest of the show. If you look at the markets, it's still exhibiting a negative trend. Sensex down about 170 points, and Nifty also below that 2550 levels. It's testing that 25,000 levels at this point of time. If you look at the advance decline ratio, however, advances still have the upper hand, so the market breadth is still positive at this point of time. India Wix, which saw the early uptick in the early trade, is seeing a bit of a cool off, 2% downtick, which is coming in. Other than that, the sectors which is weighing on in the sentiment, which is your Nifty IT index, seeing a cut of about nearly 0.5% or so, and Nifty private banks also seeing a little bit of a lag at this point. On the other hand, if you look at some of the sectors which have picked up, that is your Nifty auto index eking out very slim gains. Nifty metal index also eking out very slim gains at this point of time. Nifty FMCG index also flat in the green. However, Nifty energy is showing good trends with about 0.5% gains, and Nifty, like I was mentioning, Nifty oil and gas also, and Nifty realty index like earlier with about nearly 1% gains or so. But let's quickly move on with our next guest of the show. Joining me is Krishna Appala, fund manager at Capitalmind PMS. Krishna, good morning. So good to have you here. How does the markets look like, given that we have had tariff volatility and cross-border tensions also out of the way, and the past two sessions also have seen good upsurge in the markets?
Good morning, Lovisha. So good to have you on the show. So as they say, the second best time to invest in the markets are when they are just fine, not euphoric, not panic, when they are just fine. And we are right now there. So the kind of panic we had seen, not exactly panic, but the kind of fall we had seen Jan, Feb, March, and the ferocious rally we had seen in the last 1 month. So that looks like, okay, we are somewhere. Are we entering the euphoric zone? But we think it is not. We are not at there. Of course, having said that, in the last 1 month, we are up around 14-15% on Nifty. That looks ferocious because the fall in last quarter was equally ferocious. So we are not there yet. We are just fine. However, this kind of market, if it continues for next 1 week, 10 days, then we may enter that zone of FOMO, euphoric. But right now, we are not there yet.
Okay, okay. What is your reading of the India Inc.'s earnings so far? However, how would you distinguish the valuations that we are seeing in large caps versus the small and mid caps?
Okay, so Nifty 50, if you look at the earnings, the median revenue growth is roughly around 7.2%. And the positive thing is that the median PAT growth is roughly around 10.4%. So that is a good booster. And much better on the broader market, if you see NSE 500, the Nifty NSE 500 revenue growth is at around 10% and PAT growth is roughly around 14%. So that's why when I say that, okay, the rally is kind of looking ferocious, but however, it is getting backed by earnings growth, earnings visibility. So Nifty has shown double-digit growth, broader indices are showing double-digit growth. And more importantly, if you look at Q4 in itself, all the heavyweights, be it banks, private financials, or Airtel, not a recommendation, we hold it. But if you look at these examples, most of them are showing relative strength in both earnings as well. So that's why we are kind of not overly bullish as such as we were earlier 1 month back, but now kind of looking decent zone at least over the next 6 months to 1 year.
Okay. So, where have you started to deploy more cash right now? What are the sectors do you believe that, you're more overweight, and what are the sectors you're underweight at this point of time?
So right now we are fully deployed, and we continue to be bullish on private financials. The core idea is that 2 more rate cuts expected for this financial year, and then we continue to be bullish on defense. So I just want to put a point in defense right now, because whatever happened between India and Pakistan in the last 1 month, it's not because of that defense is looking good, but just to give a data point, the indigenization which was started 4-5 years back, because of whatever events happened in the last 1 month, the boost is expected to continue further over the next 3 to 5 years. That is one thing. Second one, basically what happened was the defense as a sector, we had seen big boost during 2022, 2023, because the budget allocations were increased at a rate of 10%, 13% continuously. Then what happened in midterm budget in July 2024, the growth, which was double digit in terms of budget allocation, has fallen to sub 5%. That is where, if you see, the market has kind of already factored much of the growth, and this came as a little bit shocker. The expected was double digit budget allocation. It came as below 5%, and that's why all the defense players have kind of topped during July, August, September 2024. However, in 2025 Feb 1st, if you see, the budget allocation have increased by 9.8%, so roughly 10%, which this up move wasn't factored till about 1 month back. So and whatever happened in the last 1 month, so that's why I'm saying it is not just a story building defense as such, because the fundamentals are in place, the momentum is in place, momentum as in the order books and all. So it's not just a narrative story, but there is still 3 to 5 years story for defense. And one more point I want to add for defense is that, as you see, last year FY25, all the defense pack has seen a total order book of 2 lakh crore, a little over 2 lakh crore, which was double than the previous financial year. And in just this calendar year itself, in the last 4 months, the total order book size is roughly around 75,000 crores across the defense place, both private and public. So that's why we believe there is some element of still growth left in defense in the next 3 to 5 years. And third pack we are looking at is aspirational consumption, not the regular non-discretionary. So even purely differentiated in Q4 results, if you see the luxury and aspirational segments like hospitality or M&M, I mean, no recommendation as such. We hold M&M. So there you are seeing Ethos example. So there we are seeing the earnings growth upwards of 20-25%, whereas the mass segment, the likes of Nestle, HUL, Hero MotoCorp, Maruti are struggling with volume growth, and also that's why the aspirational segment, and on top of that, the 12 lakh tax benefits have already kicked in. So yeah, broadly these 3 themes we are bullish on: private financials, large banks, large NBFCs, defense, and aspirational consumption.
Okay. Krishna, you mentioned about defense stocks that you're bullish on them, but I want to understand them from a valuations perspective. While they're winning large orders at this point of time, but it takes years for that order win to convert into revenue streams. So there could be a mismatch between the order book and the profitability which is going ahead. So what would you suggest investors to look at it from a 1 year perspective? Do you expect that they should enter these defense themes, and what is the exposure that they should have to these defense stocks?
Yeah, so Lovisha, the private defense players are definitely looking at stretched valuations. However, the PSU defense plays, they have done really well, not just on in the last 5 years, because they have improved their balance sheets, they have improved their return ratios, etc. So, but still, even after the run-up, what we had seen in the last 1 month, PSU defense plays, the likes of BHEL, not a recommendation, we hold them, so please consider it as biased. BHEL, HAL are kind of relatively looking good. provided a Massgaon Dock, etc. and all. Again, we own them. Not please, not a recommendation. From a relative, because they give that niche. They are the market leaders in those particular segments. They are at least relatively better valued when compared to private defense plays. So may not be good time to pick private defense plays as of now. Of course, they have their own niche segments. They are, even though their size will be small, may not be a good time to lap on them right now. Better to wait, because if we believe this story is structured 3 to 5 years, better to wait for private defense plays. But PSU defense plays are still looking decent at this price.
Okay. I also want to understand about certain export-oriented themes, because some like IT space, pharma stocks at this point of time, how do they look like? Because we have the tariff uncertainty which is out of the way. Would you suggest that investors can relook at these pockets at this point of time, or should they still stay on the sidelines?
IT, yes, definitely yes. Because IT, we have that valuation comfort on our side, because all the large cap IT names have gone back to their 2022 highs and all, 2022, 2023. So there we definitely have that comfort. And moreover, whatever is the kind of negativity is already priced in, just because I mean, of course, there was a wait and watch mode on deal wins, orders flowing in for large IT names. But however, as you mentioned, things have slowly started to look good. That is on the large cap IT side. On the mid cap IT side, each company has created their own niche in particular segment. Some can be in cloud, some can be in their own platform businesses and all. So there, the valuations are still stretched because of the niche they carry. So large cap IT names looking good. However, may not be immediately hop on, because the earnings visibility is not at there. So as a earnings, IT as a pack is looking good, but may not be immediately lap on. So better to wait for at least one or 2 quarters for the commentary to come in and some more deal wins to start happening. Let the ball roll before we lap onto IT, large cap IT.
Okay, so wait on for another 2 quarters for IT stocks. Also, Krishna, about cement space, because so far we are seeing that majority of the cement players have reported good numbers on a sequential basis on their operational performance. So is it time to look at cement stocks at this point of time, or how do you see panning out going ahead?
Cement consumption, if I believe that it is back to some 6-8 years, whatever we had seen 6-7 years back, the consumption is still at that. And on both volume and value terms, it is growing roughly around 4 to 5%. So it is still there. Whatever we are seeing, of course, there are some improvements in EBITDA per ton. There is some 50-60 odd rupees increase and all, expectation of margin improvement. But on a large scale, are we seeing the sector as such boost coming in? May not be immediately for now. However, whatever it is seeing, it is already priced in. Looking whatever we are seeing in Ultratech, Shree Cement, not a recommendation. We hold them in one of the portfolios, but it is already priced in for a new entrant, for retail investors for new entry in this current price.
Okay. It is already priced in majority of the re-rating triggers. All right. Anything that you did mention that IT as a pack is something that the investors should remain cautious about. Other than that, anything that you want to point out for our viewers that they should remain on the sidelines?
On the sideline, 2 things. It's tempting to look at microfinance and specialty chemicals. Specialty chemicals, again, from 3 years, nothing has happened, sluggish growth and all. But it's the valuations are so tempting to enter, but may not immediately, because one, the demand surge is not that high. Second, the supply which we are looking at China, the recent example of Aarti Industries con call Q4, they have said they are. Even though they are looking at demand growth, sluggish growth, mid single digit, the supply on China is so much that any tweak here and there can still put pressure, continue to put pressure in their margins. So that's one thing. These two pockets. Microfinance, having said that, still 1 or 2 more quarters of pain is what we are looking at still even now, because if you see Manappuram's subsidiary Ashirvad numbers, they have taken a huge hit. Things are improving for few. For example, Ujjivan has reported collections above 99%. So things are looking good, but still it just take one more bad quarter for them to fall back. So specialty chemicals and microfinance are still pockets where we would like to wait on sidelines for some time.
Okay, all right. With that, we have to let you go, Krishna. But thank you so much for your time, and we hope that we connect with you soon.
Thank you so much, Lovisha. Thanks.
Okay, all right. Let's take a quick check of the markets. The sell-off is still persistent at this point of time. Sensex is down about 200 points, and Nifty is also below that 2550. But however, it's still holding above that 25,000 mark, given that the market breadth is still into the positive territory. We are seeing a little bit of a support, which is coming in from the broader end of the markets. Midcap and small-cap indices once again outperforming the headline indices. Some of the sectoral indices at did pick up pace but has fizzled out. That includes the likes of Nifty FMCG once again down flat in the red. Nifty IT index, like it was, it's same at this point of time, 0.5% cut, which is coming in for the Nifty IT index. Nifty Auto index continues to do well. Nifty Realty and Nifty Metals also in the positive territory. So yes, we'll watch out whether or not if there is any pickup in the second half of the trading session. But for now, we have come to an end of this edition of the Opening Bell. Don't forget to tune in at 3:30 for closing, and we'll be discussing about how the market has developed and what the stocks were in focus. Until then, signing off.